Electric vehicle stocks have attracted an absurd amount of attention recently. I made a video a while back talking about the huge surge in electric vehicle stocks, and I've covered a lot of companies such as NKLA, NIO, Workhorse, and Electromechanica. I'll link a playlist to all those videos in the description of this video. AYRO is interesting because they aren't trying to offer traditional cars or trucks. They're specifically targeting the light-duty and smaller vehicle market. These are very light-duty. They aren't like the commercial last-mile delivery vehicles of Workhorse, or the luxury SUVs of Tesla and NIO, or the 3D renderings of vehicles that don't exist like NKLA. The backstory of the company is interesting. They're an American-based company in Texas. Originally, they started as Austin Electric Vehicles, which became AEV, which became AYRO. I'm not sure if they were reorganized or anything between the AEV and AYRO stages. All I could dig up from their LinkedIn profiles was that AEV just points to AYRO now. And this was a privately held company. It didn't become public using a special acquisition company or blank check company. They didn't IPO either. Instead, the company Dropcar, which was trading as a penny stock with the ticker DCAR, risked getting delisted from the NASDAQ. Dropcar ended up merging with AYRO. This was a reverse stock split that threw away all of Dropcar's business. This is a seriously strange way of doing things, and to me at least, it doesn't make any sense for a company going public. Maybe this was a way of helping out the owners of the failing Dropcar company. It's weird, and it definitely sets a bad tone for this stock. There are also very limited details about this company. From SEC filings, we see it's operating at a net loss right now. Getting into their products, there are two listed on the website. There are the 311 and the Club Car 411. The 411 Club Car is an interesting offering. This would fit into the niche of small urban transport, probably replacing the utility vehicles you see driving around a college campus. Large business campus, event buildings, things like that. AYRO announced a partnership with Gallery Trucks for all-electric food trucks, so it's definitely going to see contractual agreements for this project. This contract is actually $584,000, and that seems pretty solid. There's been continued updates about this contract too, so it appears that things are progressing fairly well. As for their other vehicle, the 311, this is a similar concept, but it seems less practical. They point to it as a parcel delivery, parking enforcement, personal use. I think personal use is a stretch. No one is going to be commuting on something like this. And it doesn't look like they're targeting that market. Maybe they're talking about transportation on a farm or something, but it looks to only come with street tires. It has a top speed of 50 miles an hour, and from the website, it seems to either come in the old school lead-acid battery or sealed gel batteries. I couldn't see any information about range or other things like that. There also isn't any news about contracts on the 311, which is unsurprising as the truck seems to make a lot more sense. It looks like no one is willing to commit big time to the 311 right now. They also have an entire page dedicated to concept vehicles, but concept vehicles don't really mean anything to me, and they shouldn't mean much to you either. 3D rendering is not a vehicle, and even a prototype means very little until you have a production line. What strikes me as odd is the 411 is being sold by a separate company, Club Car. I'm not sure what the exact relationship is between these companies, but they have a publicly announced partnership, and AYRO seems to be the contractor for this vehicle. Also, the cost of these vehicles is beyond absurd. If you go directly through Club Car, $22,000 for a base model. Companies like Kawasaki and Polaris have offerings that are under $7,000. Now, those are smaller models, but they go larger and larger and larger. And granted, these are gas vehicles, but the vehicles that Polaris are making are incredibly powerful, capable of long range, and very rugged. These are huge, popular vehicles that are used by tons of utility workers, campuses, and other things. AYRO does have a factory, and they recently expanded it. And you can buy their product right now. This is farther than a lot of EV companies are. And at these prices, I imagine they're turning a healthy margin on those things, although this can be dulled by the partnership they have. This is a weird case. They have at least one solid product, and they are actively producing and selling these vehicles with multiple partnerships set up. But on the other hand, they were set up in the weirdest way possible, and there isn't a whole lot of info on this company, especially after it's rebranded itself so many times. We also don't know what their road to profit will be like. Remember, at least of the time of this SEC filing, they aren't turning a profit. Another thing to consider is that their target audience is campuses, events, things like that, all of which are on hold because of the current public health situation. Colleges are online, gatherings are limited, airports are serving less customers, not to mention the economic issues. This could put a lot of pressure on the company in the short term. Compared to other EV stocks, their market cap is fairly low, but again, they're going into a very niche, small market. This is a very speculative investment right now, and it can carry substantial risk. If you're interested in this company, they have an upcoming earnings call on August 14th. Hopefully, it will reveal a lot of information and numbers, and we as investors can make a more educated decision about this stock. However, if they are reluctant to share information, like the Nikola's earnings call, then that could be a message to stay away from this stock for now. I would say this is very speculative. They have potential. They're selling things. They have a factory set up, but there aren't a whole lot of details available, and there aren't other analyst reviews available as well. So it's hard to make a very strong opinion on this stock. I would hold off until earnings and then maybe evaluate what they have to say there. See how you feel about the company, see if they're open, see if they have a plan for the future.